do it. Okay. I know. Yeah, that's another one I want to check out. Oh, but there's so much to do, so much to look at all the time. I might do it over here, so I don't really care about this one. Yeah, this is good. This is old. Old. And way wrong. Well, partially. Some of the levels were right. Yeah, maybe. I'm curious about this one, though. We'll see where it's at. Maybe I'll check it out. Not sure what the deal is with 170. Ooh-doo-doo. All right, let's do this live streaming. Hey, welcome. Hello. I'm gonna be talking about AMC and GME in just a minute, but I am also trading, so I'm making some moves here, and I want to make sure I don't miss them. So I got to be a little bit careful. So this recovery may actually be done. Now I'm curious to see if it's overbought. Let me get rid of my Discord for a bit. Even though I like it because I've been using it for trade setups. It's been very useful. Now let's see. Well, this was a pretty easy trade. I mean, Target had a big sell-off, huge sell-off today. And hey, thanks. I'm doing well. And the recovery here, even if it has like a 50% retracement, would go back to about 100. And I think that over time, it's very likely going to come back to. I mean, it's very likely, in my opinion, it's going to come back up and fill that gap. And it would take time. It wouldn't have to be immediate. And I definitely think it could be September. So this is kind of a crazy week because, yeah, I don't know, man. This week has been a bit bonkers because there's they're expecting to have like Fed minutes, and then there's also reading up, on some things, and then also Jackson Hole. So if you don't know what that is, I think it's like a banking conference. The central bankers get together and yuck it up. But most people are expecting some kind of a tip-off of some kind. And they may be overestimating their chances. I mean, we all are kind of waiting for something to happen, but maybe it ends up being a big nothing because he's very guarded, Powell, and a lot of times, even though he may talk about something like in his speeches, it's not going to necessarily kill the markets or make them run. I do think there's a lot of people who are going to be looking at those comments that are made, Fed minutes and stuff like that. From what could tell in recent news releases, the people who were dissenting last time on the Fed committee are still kind of yeah, that's still what I think. I haven't heard anything about anybody changing their mind. So any kind of news like that, softening on those positions could send markets and this is the problem though. It's like it kind of goes both ways, because the general thought here is that if you're and this is kind of why I was confused why Tesla and like big tech were selling off ahead of it, because the thought would have been that this would have been an opportunity for disbursement, so, or rotating positions out or broadening or whatever you want to call it. And that was the argument I made last time. I think last time I streamed actually was talking about that in relationship to AMC and why I was expecting August, September during that rate cut period to start, having this disbursement. And it's a lot like what we saw with the S&P 500 and IWM to some degree in COVID, where after the repositioning happened and everybody's bought back into their positions and we've kind of secured a new bull market for a time, then you see that certain small caps in your meme stocks, the liquidity pours in. But before that time, especially on AMC, it's mostly negative. I mean, it's mostly down. It's mostly like crap news for AMC in 2020. There's nothing particularly positive about the chart in that time unless you're looking for the spring and you're looking for that bottom to kind of finish out. So you have to kind of be looking for that back in 2020 to see it. And then you can tell that like when the money kind of in the market, when it kind of reaches this place where it's finally in like a bull market, there's this, okay, now we're able to sort of diversify again. That's pretty common from what I can tell. And IWM has definitely lagged. It has not made an all-time high. They thought it might a couple weeks ago. A lot of people thought it might maybe about a week ago and a couple weeks ago. And it did have a pretty big move, but it kind of settled in. I think it's waiting for that rate cut decision again. We saw something similar in, honestly, in that May build out. And I'd have to go back and look at that timeline again and see when those announcements were made and what was talked about at that time. But it was similar, where like IWM was kind of lagging behind, and then it finally gets this like burst of liquidity. And even in the midst of that, AMC is kind of late to the party. But we're already in that, in my opinion, with IWM. It's back from April. If you look at that big drop off, it's retraced a good bit. I mean, it's come back, I don't know, like 70% or something from those lows. So AMC by comparison is extremely low, right? And I've not been talking about AMC because I think it's bad. So if I don't stream a long time today, I just want to kind of like get the facts out there, and that way it's replayable and rewatchable, because I don't know how my internet's going to hold up. You never know on these days. There's like nothing about anything that's happened here on AMC that's been particularly noteworthy, like beyond what we already kind of expected. So when we were coming back up here, and this was probably in early July, so over a month ago, I didn't know exactly what this was going to look like, but I suspected we would come back up to near the creek, which it did. Now, it made a lower low here. It didn't come all the way back up to like what I would call like the official resistance. But it does have a resistance at a logical level around 350, right? And at that time, I suspected that going into earnings, I had something like this on the chart, where like going into earnings, you're probably going to start seeing like a repetition of pattern. And not necessarily like a wedge per se, but something similar to that, because in previous times, that's what we would expect to see, is like an iterative motion. But it's also based on like the bigger picture. And like the bigger picture has been coming down for a while in this iterative motion, these buy-ups with these sell-offs following, and you're really just watching and monitoring to see when they're going to stop. And I've repeatedly said that I think that's what we're dealing with right here, and that what we really want is we want to see a sell down before we see a buy up. Because if we buy up first, then it's likely going to be distributive. So what I said before earnings, and I don't even remember last time I streamed, I'd have to double check. It may have been before earnings, just before it. But I said I don't want to see it come up really high and break over this top. Because if it does that, it could signal basically a fire, like, uh-oh, we could be then distributing, and this could be essentially a distribution where you're not actually in a, and I don't mean in like a good way, like locally, I mean like in a bad way, where if they bring this up, especially, above, I think I said like 350, and they bring it up and start selling it back down, you could be in a really bad situation where this is going to come down and stay down for a while. So what would be better would be if you do have a pump to kind of keep it contained right here, maybe push resistance, which it did, and then bring it down for its spring action, which would be ideal. I've repeatedly said for the last year, it feels like a long time. I think it was December when I really started talking about August. So ever since this drop off, and we're like, the way this time's out, it's probably going to be August, that we would have a drop low and there would be some kind of a reaction back up to 4, and you'd have some kind of a cat ear motion here. This idea right here, I can go back and pull out charts from all over the place. Now, some of them are going to show July move, like it's going to show this all happen before July, because early on I was not really sure where the middle was, and I was thinking it was back here and not right here. Okay, so once that shifted, then I was like, it's probably August, and that makes sense because it's a 2-year cycle. But there was a time where some of my charts were like July, again, way in advance. Okay, not like right here in March, I'm thinking, oh, it's going to go in July, but like way in advance. I was like, back here, I was like, it might be summer or late summer before we go. I don't think we're going to go in June, and in May, I don't think we're going to have this big breakout and go. That has been the narrative for a while. This is not different. Like, this is the same thing that was expected. It's exactly the same. It's an iterative motion of the whole. It's exactly what it is. And that's good because that iterative motion of the whole is going down, and that's a positive sign. People don't want to think of that as a positive sign, but like it's a positive sign. And really more accurately, this is all part of, this right here is actually all part of the second cat ear. It's like contained in itself, like there. This one. This is all the second ear right here coming down. It's a more accurate way to look at it, and I don't want to get into like high detail about that. So is there anything to worry about right now? No, there's not. And in fact, again, like it's mimicking and echoing a lot of the setup that we had in 2024, but it's a huge, like it's way bigger, and it could potentially be a spring for the whole. So again, I just want to get this out there so that it's said, it's on the video, right, in the beginning. And that way, if there's a problem with internet as we go along, it's already been said and done. Remember, like early on, there are indications that this might be kind of bullish for other reasons, and we don't want to, again, belay the point too much here. But one of the things that stood out to me was the, and it's maybe it's not as easy to see it on the extended hours, because I think that in this case it looks better without extended hours on. So I may change that because there's a motion here that jumps above, yeah, when it's not in extended hours. And this is really important because this is essentially the exact same thing that's happening right now. I don't like, and I've kind of said this before, I don't like trying to draw too many comparisons because it becomes a little bit like you get married to this idea it has to be a certain way, and it does not have to be a certain way. So just because it's similar or very similar doesn't mean it's identical, it's going to be exactly the same outcome, which is why I'm like, doesn't really concern me if it drops into a macro spring here, because I think there's a bigger picture going on, right, on this bottom. Like this is a huge bottom with a potentially huge phase B bottom, which is before May of this year, and then you've got a big push up before a potential drop. But this right here is very significant. You see that move right there? Now this is right before earnings. That move pushes resistance on the creek. So it does drop low, it breaks the trend, it goes up high, and yeah, that's a little bit of a distributive action, and it would have been right to see it that way. And then this was probably, without even looking too close, was probably, again, that secondary distributive action right there, where it's like a cat ear, as I call it. and then it drops down low, and it does drop the trend. So like if you go back and you look at that support, you know, even though it takes a minute to get there, it does ultimately drop what the trend support had going. But this motion right here is also in this case, a telltale sign of like something else, which is this kind of bullish action. You have a drop low that doesn't really dump anything except for the most local of uptrends. And then you've got this hook action that actually goes quite high. And yeah, there's a gap, yada, yada, yada. But the point is that it does actually prematurely, if you will, jump the creek. And then it goes down into this low. And you've got in the bottom, and I don't want to get into high detail about this. I'm just going to draw it out wide. You actually have a pretty classic micro range that's got the very classic like Wyckofian look to it with an auto reaction, a phase B top, and then a bottom into a spring. There's even like a micro version of this when it got really low. I wouldn't even bother. You can go to like the 1 minute chart if you want to look at it, but you can go take a look at that area. It's basically just doing the same thing over and over. It's dropping again here. That same motion that was made right here is then made right here, and then it's made right there, so on and so forth. And then when you come back, the only real requirement was that this push above the top, right, up here around the 350 mark, which is very similar to where we are now, and then it needed to come back to like 320 and check before going on. And that all happens in like a matter of minutes, like within an hour, the day that it broke out. Okay? But this initial push right here, I'm finding that there's a whole lot of reminiscence, and we've got a really similar setup right now. I just don't see like, there's going to be people that are going to come in here today, and they're even going to be thinking in their head like, this stock is trash, like it's garbage, right? And yeah, there's no push here in regular trading hours. I get that. There's no like obvious push anyways over this top, but at extended trading hours, it's there. Like there's a push, right? There's a big buy-in, especially on that earnings day, and then it drops back through, and when we're heading low. And when you look at the big picture, again, regardless of personal opinion about this or that, yeah, this is a little different in that it could go lower, but we're seeing the same thing. You're seeing that early weakness right here. I don't see this as confusing at all. Like when this came back below, it was like, okay, that's it. That's your new bottom. Now we're going to go up and then bring it back down, and you've already lost the uptrend, so it's not going to hold up when it drops back in. So I've got a lot of little squiggly lines here. I can get rid of them if it helps, because some of those were about like an earlier, well, let's just say like a local spring. But in reality, like it's fairly simple. Like this is not complex at all at this point. If AMC is going to go, right, then you would expect that these iterations will change character at some point. We don't know exactly when that's going to happen, but it's already lost that trend that it was holding on to here. This walk down, this is the build out. It's the same thing, and I've gone through this so many times on this channel. It's almost like obnoxious at this point. This is the exact same thing we talk about like all the time. Like this little guy right here has the potential, and it usually iterates, right? And this is the big picture. Hey, that looks just like the macro. That looks like the big picture when we came down and then ran to 14 or something. Yeah, it does. It should, because that's the basic motion of this stock, right? And how it tests liquidity backwards and then determines where a bottom is. At this point, it's entirely possible that this is not done, right? And it goes down and then forms like a lower low. That happens. If it happens here on a micro level, it certainly could happen on a bigger picture level where you get like a bigger bottom in terms of like a low, which is into a spring-like motion. I don't worry too much about that. What I typically look for instead is where are the parallel structures in this? And like that's really all you have to look for, because you're not going to know what you don't know. And if you don't know where the liquidity is going to be captured and you don't know if it's going to spring or LPS, this is kind of like the best way that I've found that I think is the most accurate way to determine maybe where this could happen. And it's really about looking at these parallels coming up, right? Because this is the setup. I didn't create these markers. I'm not just finding like random stuff here. Like they're always in the same spots. Like they're always looking at these same zones. And you can look at the big picture and say, did it hold up here? I think you find that on the big picture, that answer is pretty clear, that like this ended up being a really significant zone, these two markers. You can do that on the big picture in your own time. You'll see like how it navigates. Typically, AMC does not stop here, which is like more of like that last point of support, where it's instead of making a spring, it bottoms out early, it makes a higher low, and then it just starts advancing the other way. This is not that typical for AMC. It just doesn't do this very often. It has done it before, but it's not very often. Most often what we see is that this ends up being kind of a secondary sell down, and you get a similar motion, and what's been happening more recently is that it goes all the way up, and then it starts the whole thing all over again. And it's obnoxious, but it's really just iterating like the same garbage, right? And so in this case, you know, you see this push up right here. This is exactly what happened on the big picture, is that you get this push up before the bottom. And then it's like, well, what is it going to do? We'll go back and look at 2020. Like, it's the same structure. It's the exact same structure. It's basically a 50% retracement, and then it drives down again, and it doesn't come to the bottom, you know, right away in some cases. Like, it's not doing it right now, but it could. We know that this is like a midpoint. It doesn't have to be, not like a middle. The middle's a little higher, but 350 area could be a midpoint from that big spike up to 4 to drop it down to like the 250 area. I think it's very reasonable to think that that's a possibility, because right now we're just kind of doing this. We're just hovering. It's entirely possible that this is not done. It's going to go ahead and do the final drop here. There's a lot of ways to determine where that might be. I've already done a lot of that effort previously, and I'm not going to do it right now on the stream. 180 is certainly still on the table, even though that's very low. I honestly think it could probably afford to get away with even as like high as like 265, to be honest. I think a local spring here at 265 could be enough, which is not very low. It's unusual, and you'd say, well, that's not a spring because it's a bigger picture. It's a, you know, yeah, I know. I'm aware of that. You know, I'm very aware that that's not a classic spring, okay? But I do think it's a possibility. I'm not going to sit here and say it's not possible. It's possible. There's reasons for that beyond what I'm just kind of telling you right now. I found a lot of reasons that might be the case. And 265 was where we had gravitated towards heavily on this bottom. So it wouldn't surprise me if we did that drop. Frankly, if you're just looking at the range as it is right here, you might think that it doesn't need to drop below 275 or something. Like, it just needs to kind of dip into this liquidity zone right here in this pocket, and then it's good to go. You could just take off. So why are you thinking that it's a bigger? Because I think there's a bigger range like at play. I don't think that that's it. And it's possible that it hits like that low and just goes like it's not even very low at all and just takes off. But I think there's a decent chance that we're in for like a bigger sell down, you know, and especially if you get kind of an early move here that fails to like 3 or something, and then it drops down one more time. I could definitely see that as a possibility that you're going to see some kind of significant slide from 3. Now, you guys are probably going to look at that and be like, well, that doesn't make any sense now. Why would we do that now? I know. I'm aware that like there's no bad news imminent necessarily. But I was thinking about that stuff with Jackson Hole, and I'm like, you know, if they decide that they're not going to loosen the fiscal policy in terms of like rate cuts, if he's not dovish, but he's still like, you know, we're fine, that could actually send small caps into a final sell down. It could do the opposite, because instead of getting confirmation that these debt-laden small to mid-cap stocks are getting some relief, you're really getting news that, well, it may last longer, that these interest rates are higher, and it matters more to small caps. It always has. So there's a possibility there, and that's why I was saying earlier, I was kind of surprised to see the bigger tech sell off and ahead of it, because I'm like, doesn't that kind of bode like backwards? And then I'm thinking to myself, well, it may not matter, because it may be that tech is not going to have some huge boom if they do rate cuts. But then again, maybe it's more of a signal of just moving on. And I don't want to get into like that because I've been thinking about that a lot the last 3 days, and I don't really want to get into like the heavy detail of it. Target's moving. That's good. I need to keep an eye on this because this is what I'm trading right now actively. Anyways, I'm going to be flipping around a little bit here, and it looks like it's about to be oversold on the 3-minute, but that's not a huge deal. I wouldn't be surprised if it needs to come back, like chill out here and then go again. But I'm really looking for that $99 on target. That's a big hit for me. So I'm thinking that there could be a mixed bag. And I think diversification going into Friday is probably a good idea between maybe your mega cap stuff and smaller things. I think it's going to depend in part on the business as well. I don't think it's going to be unilateral. But right now, like this is fairly straightforward. If you got another iteration of the same thing here, the expectation would be that this would probably do like a 50% retrace and then do it again. So I'm just kind of coming back to AMC to finish this thought because I didn't mean to move on from it. So like it would be logical to expect that this might not actually go down right away and that you may have a buy back up, and you can see why that presents a bit of an issue because then this becomes what? Like a hook. You also have an increase, if you don't count extended hours, you have an increase in directional motion here, like downward motion. So each of these is kind of getting steeper and steeper. It's entirely possible, right, that you get another reaction, but it's important to note, like, where are the creeks? Because as these kind of build out, yeah, like, it's getting steeper. It looks scary because it might have some significant drop. This is typical for, like, a spring motion, by the way. I watch stuff like iterations. I don't care if other Wyckoff people don't do that. That's not me. So if you're like, that's not Wyckoff, I don't care. Like, I don't care. I genuinely do not care. I know what to look for, and it's worked in the past. I'm not going to say that it's bad just because it's not part of the 100-year Wyckoff plan or whatever. The iterative motion here, when it starts to change, that's when you have the buy-in. And so even if this were to push up, like, yeah, at this point, it's a possibility, and we're losing for some reason. I don't know why. Again, like I said, I was kind of worried that we might have problems. But even if we were to do this and do like a 50% retracement, which most of these have been pretty succinctly about 50 to 60% retracement, the 618 level has been hit a lot, I think, on these retracements, pretty much every single time. So if you got a 60% retracement right now and it didn't hit a new low, you might think that that's it. It's not coming back down. You could be right if it hits here and then continues. But if all it does is come up to the top and hit the top, you still have to wait one more time because there's still one more final thing to do. And this is why the iterations, in my mind, are non-negotiable when I do TA, because they typically work right into the hands of the setup. So if this were to get a big reaction, let's say going out of Friday or something, or into Monday, you know, something like that, I'm not going to like pretend like I know exactly what's going to happen here. But if this were to get a big reaction and come up, it's not quite done. I think you could say it's almost there. But let's say if it goes up first and it hits this top, it's a 618 retracement. Well, it's probably going to try one more time. And you can see where that is pretty easily. This would give you a pretty reasonable expectation that it could come back down and hit that creek. This is where things really start picking up speed, because once it makes a first advancement, then you just have to wait for that creek check. And if all goes well, then the next one would do the same thing. It would advance and then creek check, advance, creek check, advance, creek check. Before you know it, you're basically leaving. And that's how quick it can be, rapid fire quick. But then zooming out, it's like that's pretty much what would be expected anyways. Well, what if it continues to do like iterative stuff? Well, again, I can't promise anything. But if this did like a 618 retracement and then goes down again, you know, you're really just looking at this like, you can look at this through a micro lens like I'm doing right now and like nitpick a little individual parts. But then just like look at the bigger picture and just tell me what that looks like. You take out the noise of this idea that it's going to repeat itself and just keep doing these 618 retracements. Well, that's not quite right. You know, if at some point this is able to build back out, you're going to have a creek check after a creek check after a creek check. But on the bigger picture, it just starts looking like what we came to expect anyways, which is essentially like, oh, well, if it does that, then we're sort of working our way down into a spring, but now we've got some padding below us. You could see that build out, and that's why I've got this box where I've got it. I think there's a decent chance that it hits that box or that area. Doesn't have to be that low. I've already stated why. It could definitely hit here and just go. But I'm watching these levels and I'm like, yeah, it kind of makes sense to me that that's the case. And it's looking like you're going to be building out pretty readily into September, which is the area where you've got the GME stuff. GME is a hugely important chart right now. I want to get to that one actually more so than AMC, because I think AMC is just doing what it does. Like, every time it's doing like a drop, it's basically walking down and just like slightly puncturing the bottom. It's probably doing that right now as we speak. It probably did it today right here at 9:30 in the morning. It looks like it dropped slightly through the bottom. That's what it did here. It dropped slightly through the previous uptrend. It's probably going to keep doing stuff like that and then having these little retraces after it goes through it. It's testing the waters and then pushing back up in like 618 retraces or 50% retraces, so on and so forth. And you're really just kind of building downward, and that's going to rapid fire. Usually that's what happens, is that it gets into this kind of hyperactive mode, and you get these, maybe if it dropped a little lower here, it'd be easier to see it, but you get these reactions that start looking like, well, it's doing weird crap, but the good news is that now it's like on top of a creek, and then again, you'll see it work its way out. Like, it will eventually make the first jump, and it will be an outward motion from there. And that's really what I'm looking for. Guys, I don't see this as controversial. I genuinely think that this thing's about to go. But I also think that it's a difficult read, because while I definitely think it's possible that it's ready to go now, there's two dates in mind. And one is the 25th, which is Friday or Monday after a Friday, right, Jackson Hole kind of thing. And the other is in September on the 17th. That makes it a bit challenging because there's no like one singular date that makes a lot of sense. And I could see how if this ends up not going in favor of small caps, I could see how that could build out into a longer bottom without a whole lot of effort. So if you're somebody that's like waiting and you're like, I piled into August calls or something, well, look, you got to take responsibility for your own trades. I'm going to say that right away. But I would suggest that that's a very dangerous place to be. Like I've repeatedly stated, like I do not have anything before December at this point, because I don't think I'm good enough to tell you exactly when things are going to happen. I can tell you that, yeah, August 25th is the 2-year mark. But I've also said that I'm not really sure about September 11th. I think that's a tough one, because September roughly 11th to 12th, you also see that drop in 2023. And I think it's a difficult position to be like, it's one or the other. You have to pick one. Well, I'm sorry. It's a 2-week window, week and a half window. I'm not going to pick. I'm just not going to do it. I think that's a dumb thing to try to like force on somebody. And so I'm not going to force it on myself. I think it's a good estimation. And I think it makes sense when you're looking at rate cuts coming up in that window, August 25th to September 17th, which is a little later, but that all makes sense. And then you've got GME earnings on the 3rd or thereabouts. I'm not sure if it's changed, but that was the estimated date. So I look at this and I'm like, yeah, right now we've got a pretty easy to see jump on the creek here for the RSI. But it certainly could be a situation where this is elevated and it's waiting for like a final drop. I don't think I would put it past that. Never would. You know, I don't like these kind of curling motions on AMC usually. Sometimes they're fine, but typically it's been bad for us. So I'm not going to sit here and say, oh, it's definitely about to, you know, the next time it does it, it's going to go. But it certainly looks very close. Very, very close. So it would not surprise me to see one more move that attempts to kind of run up through it. Maybe that's Monday, and then it comes down finally. So maybe Monday it tries to kind of advance here, and then it finally comes down after Monday or something like that into the third or something like that. Well, that's backwards, Booksy. Not quite. Because if the goal is to kind of wait and trigger it with GME, if that's really what's important to the operator here for whatever reason, and that date seems more suitable, then it's not a big deal to delay it a couple days. And I think it's silly and also a little bit arrogant for me to say it's definitely going to be the 25th. I think that's dumb. I don't think it makes sense to say that. And that leads me to GME, because GameStop, this chart could not, to me, like, this chart could not look better. I have kind of racked my brain about what it means to be in the middle of a cat ear here and like what that would look like and all this other stuff. I've talked about potential for downside. I've talked about potential for upside. I got, scolded for using Wyckofffian terms here when it wasn't even a Wyckoff chart. It was really a wave analysis chart. And ultimately, I was just exploring where those targets were. It wasn't even like, this is definitely going to happen kind of language. And people take stuff out of context. They take a screenshot of this. They say, what do you think of this? And then someone else looks at it and says, well, it's garbage. It's a terrible chart. Well, you're not here. You're not hearing me explain what I'm thinking. It's easy to look at something and say it's bad when you have no idea. You have no idea where it's coming from. This is what I see right now, okay? When I look back at this motion, there's a specific level right here. I'm going to highlight it. I'm going to make it as bold as I can. I'm going to make it white. That level right there, this is basically like the same thing. Okay, you remember how I was talking about on AMC, how there's like this walk down pattern, and then it goes into this big up thrust, and this is what we see on the macro, the big picture, right? And then it goes really low, and it's kind of ugly because it's not very nice looking. It's just a very like distributive looking motion. But I've talked about pretty religiously on here, like I see this as potentially like a Wyckofffian setup, but it's not always that cookie cutter clean. Sometimes it goes really, really low, right? And it's just kind of ugly, and it starts doing it again. Right, we've already talked about this. I'm kind of repeating the same thing I just did, but listen, hear me out for one more second, okay? The reason why this is important right now is because I've attested to the fact, and I've said repeatedly, that I don't think GME is that different, even though people will say they're not the same, they don't run together, it's a dumb idea, yada, yada, yada. No, they're not exactly the same. They're absolutely... They're not going to tell you when it's going to run to $8, maize and blue too. They're not going to do that. There was no indication it was going to go to $14 when it ran. I could not see it until the day before. Unusual Whales did like a post on it after the fact. They only found unusual activity like days and hours before it ran, like a couple days before it ran. That was it. There was no early warning, like a week in advance. Oh, look, there's a bunch of operators that are buying $8 strike. They're not going to do that. They're not going to do that. Nobody thinks it's going to go anywhere. They think it's going to stay the same. They've been selling covered calls for a year now. They're not going to change that. They're not going to suddenly think that's complacency, right? That's what the operators need in order to have an effective run. They need to have people screwed over. They need to have a lot of shorts in the play. They need to have a lot of options contracts that are going to run into the money and do things for them. Like, that's part of how they make money and how they save money on buy-ups. I've never, ever, ever seen an options trade ever. I can't even remember a single time on AMC, aside from maybe like 2020 when people were just going, they were right? Apes going crazy on it. I've never seen a single time when on AMC like a run was broadcasted in the options chain. So I don't agree with the idea that needs to happen. I'm just going to tell you that. That doesn't mean it couldn't happen. That's not true. That's not what I'm saying. This is not a ultimate statement, universal statement here. That's silly, but it's not, to me, that's not even part of the equation. And I'm going to take some flack for that because I know that you guys are going to be like, well, the options chain was built out for the run in May. That's what Roaring Kitty did and all this stuff. Yeah, but I didn't hear anybody talking about that in April. And the people that do talk about it all over the place, and it doesn't change anything. Like, it doesn't cause it to run. Like, the same people were looking at big options chain setups for, last year around this time in June, July, and so on and so forth. Like, so eventually, yeah, like, it's going to be right. It's going to happen. But, like, I'm not looking for that. So what I'm looking at here, though, I'm just trying to get to the point. This particular setup, I think you can tell where I'm going with this. Basically, the reason that GME's is so different is because it is effectively doing it on an angle, and this is what it looks like. This is a very good sign for us, because ultimately this back here, this motion right here, was something that I looked at pretty early on and said, I think this is what's going on, is that this is like a 50% marker. But I wouldn't have necessarily told you that I think it's the exact same in terms of the overall whatever as AMC. That's what this is. This motion right here, walking down into it, that is the same motion. Like, it is not different. It is the same motion. It is just doing it on an upward angle. Like, this particular setup, how it's traversing liquidity, is the exact same setup. It's just doing it on an upward angle. And then even more so when you zoom out and you look at that setup and you see where they walked it in the first time, it's obviously like it went way lower. And I think there's a lot of reasons for that. I'm not going to get into like all the details here on every little thing. But this is what I would see. Like, genuinely. Like, it's the same thing. Well, that's a bit of a stretch, man. Now you're just drawing weird squiggly lines at an angle. That doesn't make any sense. But it makes sense to me because I'm not thinking of things in terms of like a Wyckoff-ian setup on the rise. That's silly. I wouldn't say that. Wyckoff is meant to be used in a range, and you could use it up here, but I definitely wouldn't use it on an angle like this. I just don't do that. However, what I would say is, well, for a wave, it makes sense because with a wave on like AMC, for example, and it's super steep and down, you're riding that downward wave. And in this case, didn't ride the downward wave, rode the upward wave. Well, where is it then? I've kind of talked about it before. I think that it was always a possibility. This is where people get annoyed and where they say that's never going to happen kind of stuff. But I still think it was always a possibility that you're looking at this wave, which is really steep, or this wave, which is not nearly as steep. It's almost flat. And guess what? It came back to that one. It could come back to this one. It could come back to this one again. But it already hit that one. You look at these things and you're like, well, it doesn't need to do, I mean, why is this so different? Because AMC did all this other stuff. Yeah, I couldn't tell you exactly why. But if you were to go back and look at this, that's why I look at stuff like this. I'm like, this is possible. It's not likely going to happen, but it's possible. Because that's where the waves are. Like, that's not me doing anything like fancy pants. It's just me looking at where the waves are. And then you can look at fib retracements and stuff like that. Sometimes even more so when it's up high, I think it's distributive. That's happened before. But in this case, it's like, look, man, this is actually very straightforward. If you take this as a wave, but you look at it as a wave on an angle, it just fits like a glove. And I looked at it like this a couple of days ago, and I was like, yeah, there it is. There's the 17 hit. If you want to go down to 1704 or $17 again, it's the previous top, right, that it broke out of. There it is. This time right here from June 2019 through August 2020, that time period right here, it's the same time period as the walk-in. Like, it's actually the same. Like, if you take this and you look at this time-wise, it's the same. That's the same amount of time it's spent here. From that first buy up, hitting that position in the middle and then going across. It's the same amount of time. If you use the secondary motion, then it ends on September 9th. It's the same amount of time. I'm literally just taking the box and moving it up. Like, that's how perfect it is. So this idea, again, that like they're running asynchronous, but they're not going to run together or something because they're so different. No. The same exact thing that's driving AMC price right now is driving GME price. And then when you look at where that SOS is, that area that we were talking about coming up to 85 and then back down to 50s, look at where that is on the parallel. It's really just coming across here. It's a perfect setup. That's a triangulation right there. It's coming across. Look at where it is on the parallel structure. It's just breaking back above that middle. Remember what happened when we did that back here? Then we went really, really far. Now, do I think we're definitely going to go all the way to the top again? I'm doubtful of that. I think you could suggest that it's possible you could go all the way to this top. That's a possibility. It's also possible that this is a new channel and we're forming like a larger M-cross. That's what we've been saying on AMC, because we have a question mark in our brain on the big picture on AMC. We thought, in theory, like it could just run and keep going and you could just work yourself out. But it also, I don't know what the heck's going on with this chart. I probably did it again on extended hours, so it looks all wonky. You'll have to ignore that. But you could also have so you could go pretty far. This looks really, really messed up. It's going like backwards in time. You could have it build back down again, right? And have it build out over here. And I don't have that on this chart, but you could have it build out in 2027 low. I think if you use the 4-hour chart and you put it back on extended hours, that's actually where that is. Let me double check. Yeah. You could have it go up to 20 and then come back down. You could have it go up to $8 and then come back down. It doesn't have to do the second run, although I think it probably will. This particular motion right here, again, on a big picture, is really just a big old M cross. It's like that same bottom that you would expect to see, right? When you're looking at this wave, there's always like an initial push, comes back down, it checks the first, but then it has to check like a new one. And then it usually does it another time, and then it goes up. That's usually what we see. This is a really common wave bottom. And you actually have the same thing on the top, a 1-2 push, and maybe even 3, depending on what's going on. And you could flip the chart and do it that way. But this idea that you're going to cross like a secondary wave makes perfect sense because you've created new tops, right, in the previous setup. So it really isn't unreasonable to expect that, yeah, we could be in this area right here. We could take a left turn and just kind of be stuck again in lower positions, like between, I don't know, 8 and 7 or between 20 and 4. Like, it's not impossible, as opposed to between 5 and 3 or 5 and 2, which is where we predominantly traded. We could be sitting at 4 up to 12 or something like that. Like, this totally makes sense to me, because I'm like, yeah, that makes sense. You're coming back through and you're gonna pick up any kind of liquidity gap that you left off before you break out again. It's certainly a possibility that we see that on a small scale. It's also a possibility we just see it on the big scale, and we've done that analysis several times. Well, the ideas are kind of the same here. Like, this certainly was a possibility that it slides really low, but it'd have to break out of this uptrend. Looking at where all this stuff is, it doesn't seem that likely it's going to do that. It's held up very well. It's coming across the same regions. It really looks like it's been built as a wave this way, right? Where it's holding up here. It's not going to come back down and test these lower creeks. It's unlikely to happen. It's not impossible, but it's unlikely in my book. I'm like, But I've already said that. Like, I've said that every single time I do it. I'm like, it's just there. I don't need to prove it. It's just there. I don't really care if people think it's not possible. It's just there. It's not, it's just purely data. But in reality, like, the concept that we're talking about here is really the same idea, which is that it's very possible that you're going to rise up and then essentially do the same thing again into 2020 and then go again, because this is very normal for like the bottom of a wave. It's also normal to see that drop in and the hook down, which we did see. We saw it kind of curl up on this bottom and then it dropped through, just like it did back here, by the way. Drops through, it hooks, and then it tries to drive the price down. This is exactly what we're seeing right now. So it's a really, really common setup. Same thing right here, drove the price down. Same thing right here. It's exactly the same. This one, interestingly, hits a low early. So that's something to note. It's like, well, it did have a spring, but it actually hits it before, which is kind of fascinating. It still goes back and checks that before the end, you know, but it's the same markers. That's the same line. It even has like the early warning sign dip. There's like a dip below it, and then it comes up above. This is the same thing that happens like every single time. It came down below it, signaled that we're going to distribute. You bring it back up. You sell off, came down below it, signal you're going to distribute. You come back down, you sell off. So these are setups that I'm like, yeah, this is pretty much the exact same thing we've done every time on this trend. The only real question that you have to ask is it supported on like a shorter term scale? And then does it support the idea that you could come down low to like a 17 or something like that and drop to the lower line, which we haven't done since April 2020. We didn't do that back here. We stayed higher up. But again, like, isn't that the same as saying exactly what we're saying here, except it's on a rise? Like, this is an LPS. It doesn't come beneath the bottom. But if it had, it would have dropped below, right, this phase B, and it would have created a spring. Like, this is the exact same thing that we're suggesting, except that it's happening on a rise right here. It has not gone beneath that bottom. It's already at it. It's at it right now, guys. It's at the bottom right now. It's on the line. It's literally hovering right over it. So that motion right here, where it's like hovering right over it, I was looking at that, I'm like, it's straight up iteration. It's the exact same iteration that you see on AMC. It's just happening in a slightly different way because it's walking on a parallel instead of walking horizontally. So instead of doing your iterations with, you know, this sideways kind of like massive chop to the upside and then drop, and massive chop to the upside and then drop, and then massive, you know what I mean? Instead of doing it like this, instead we see that GME is doing it like this, where it's doing these little like M cross ups, and it's the same exact thing. Now I'm actually kind of exaggerating because it's at the point right now where it's just going sideways. It actually is not, it hasn't made a lower low, but it's the same idea. Like, it's the same concept as right here. It's just doing it at the angle at which this whole thing has been running up. So I was like thinking about like, okay, well, if that's the case, then we are making a really strong case here that this is kind of the exact same setup. It's just happening on an angle. Then the 17 is the same as saying AMC goes to like 2 or AMC goes to 245. It's the spring motion, right? And the biggest difference is that the spring motion here is not nearly as dramatic. Like, it doesn't feel as dramatic. It's really the spring motion here is just going back because of where this is triangulated on this thing. The spring motion here, yeah, it's not really like a spring in the classic Wyckofian sense. So shoot me, right? I don't know what to tell you. I understand what I'm saying. I think you guys understand too if you're actually following what I'm saying. I'm not saying this is a classic Wyckofian spring necessarily, although even locally this would be a big strength test, right? Because they'd be dropping beneath the floors here. It's really more about that rising angle. You can see that setup then as essentially like the exact same thing as AMC. If you look at it this way, it's essentially 1-to-1. Like, go back and look at the walk down that AMC has in 2023. Well, it's not the same, is it? Not exactly, right? Well, there is some minor difference. Like, one would be right here. This is September 2023, and it's the 29th. Well, crap. What does that mean? I'm not sure. I don't know for a fact that that means it's got to be a 2-year cycle, just like I was saying with AMC. But we know that on AMC it was August. So what happened in August back here? Well, I'll tell you one thing that didn't happen is GME didn't go through some reverse stock split, did it? Nope. Yeah, no duh, Booksy. Yeah, but that's my point, right? Yet during the same time period, you have the same sell down motion through that key level, which is ultimately not broken again until later. Right now, of course, we can talk about the shift and all that other jazz, but this is August 21st right here. So if you're looking at the same dates, look at where this little guy is. Call this an LSPY, right? It's at the bottom of the range. It's kind of chopping before it drops through the range. But look at where this is coming down and where that drop is, where it finally like kind of loses footing. It's right there on August 22nd. That is no different in my mind, except for the fact that this is more downward in motion, and it definitely is, okay? Don't get me wrong, it definitely is. I think there's a stronger chance, again, that AMC might have a spring because of that downwardness in motion than GME, for example. But that is no different than this same kind of drop in the zone that we're talking about here. This is where we are now. If you look at where we are, downward motion versus upward motion, I'm not going to sit here and track them like one-to-one. I'm not going to do that. But if you're talking about like distance traveled and all this other stuff, blah, 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 look at where this is if it resets. If this goes back to, again, if this goes back to that place around 1730, or if it just goes back to where it was right at that August 22nd date, that's 1866. That's not some random date, but it's 1866. Even that would be considered like a spring. It's basically a reset over a 2-year period of time. Well, that seems a lot better than, you know, this reset, which only goes to like 350 or something, right? If you think about the reset as coming up here on August 22nd, it's like, well, that's not very far, is it? And by the way, 22nd is like Friday, so I mean, I'm obviously speaking in a bit of hyperbole here. I think it's more likely a Monday thing, but you never know. If this comes back up to 358 on the 22nd, is it really a reset? Well, no. But then again, it is in the sense of it's coming back and it's trying to break over this top. You know? Likewise, look at September 12th. Look at September 11th, like I said, or September 6th. Those areas right here, that's where that zigzag happens. That's why I'm like stressing this a lot, because I think that the 2-year cycle is not like just a random thing. I think it's really important, and I don't know exactly why, other than that that's the amount of time it took previously to do a wave, a macro wave on AMC. Could be longer this time, who knows. That, to me, then as a break zone, that this is going to come back up potentially and hit this top. I guess it could happen all in one move, but I think it's more likely to happen in two, as I've stated. But even the idea that it just kind of goes back along these parallels, take the same concept, right? And look at where this one is, right here where that drop ledge is. We'll go to this one. That's right there at 887. That's the move right here. 887 would be where it triangulates to, which just so happens to be pinpointed, right? It's the same distance. It just so happens to be pinpointed by that wave that was created in the middle here, which it did in 2020 as well. It's like it's echoing the same thing. It's pinpointing the same thing. Take that into consideration and then look at where we are in the scheme of things with GME. Now you might say, well, that's down and the other one's up. Yeah, I know. But notice, again, the pattern here of where is it going? It's going to parallels. It's not going to like horizontally the same spot. It's not going up to 1425. It's going to where this drop ledge was, right here around the August 15th. That's the target that we're saying that if we think it hits here, that's the wave target. It's coming back up. So where is that on GME? You guys are going to like this, hopefully. If you don't like it, I don't know what to tell you. That's the 15th right there. Where is that on the wave target? It's at $68. Well, that's not high enough. It should be going up to 80 something. Well, look at where the next one is, right there on July 27th. this little pocket right here, this is the area that we dropped down from. You can see the resistance before and after, and even right in here in this pocket, like the distribution. Look at where that is, and that $85 range that's right above the previous top. Tell me that's not perfect. It's perfect. It's a perfect double bottom for this wave, because the wave is not going sideways, it's kind of going upward. So you take a look at this, and this in principle is the same thing that I'm arguing on AMC. It's the exact same. That's the motion right there. You're a crazy man, you know that? Yeah, I'm a bit crazy. I'm aware. That's the motion right there. That's the reset that we're going for right here in terms of like why that works for a wave count and where those hits are. I don't know for a fact it's going to come to 1866 or 17. It could just stop where it's at and go. But one thing is really obvious to me anyways, and that is that there's not a really big window of time here. I did the measurement again from these two drops. There's only two possibilities in my mind. One is right here, again, looking at those markers. One is right here in July, looking at those markers. I'm not seeing this as a difference between what happened there and what happened here. Like, they look kind of different because of how ridiculously volatile it is. But just pay attention to like what's going on right here when this drops in. You see that hits the bottom right there, it checks it, and then it's just a cat ear kind of distribution across it, okay? That same exact thing, regardless of how high the second move went, I get that it goes super high. That same exact thing happens right here. Like it's identical. It's the same walk down, the same levels, and then yes, very volatile. I get that. I'm not saying it's not. It definitely is. Same thing. Maybe even to some degree more so because it comes back up again. This is even bigger, right? It's the same exact distribution area though, just on a rise. Granted, you might be saying, dude, that's stupid because that's like trend analysis and wave analysis, but it's not Wyckoff because Wyckoff said it was up here, so it was checking this area. I get that, but I think that waves and trajectories and those angles are built in order to get you to those liquidity zones. That's the whole thesis of everything that I've been learning myself over the last 3 years. It's the master fractal, which was this M shape that I used. It was like not meant to be like some wild enigma of ideas. It was really just meant to be like this concept of like, how do you trade liquidity across a range using a wave? And noticing like where those setups were and how they were traded was the way that I started to understand this as a liquidity build out model, right? For like what is being traded, how do you buy up and successfully complete a range in an accumulation or a distribution model? This is it. Like you successfully go through and you trade like every region, essentially. That's why this is so efficient, because it goes through and it spends time every time it does something new in the tops or in the bottoms. It spends time in like unique regions across the chart, which allows you to trade liquidity evenly until the end, and then you come back to the middle. And by the end, you're looking back on it and you're like, how did they manage to fill out the VRVP, right? And they did it by using a wave. And yeah, probably some other stuff that you can track, but this is essentially how it's done. So that was like the basis of everything that I had been learning. And like, frankly, it sounds silly, but like, that's exactly what I'm saying here is like, there's no difference in my mind. The only difference is like, what angle are you going at? So AMC is doing this thing like downward, GME is doing this thing upward, but they're both accomplishing the same goals. There is a problem when you go to the upward model, which is sometimes the upward model, it's actually distribution. And the upward model, it can be really scary. Sometimes the downward model is actually distribution too, by the way. It kind of depends on where you are in a bigger picture, because you could be in the middle of a wave thinking that it's going up, but really you're in like the middle of an S curve or something and you're about to drop. So there is always a risk that this is like an assumption that just because you're making this liquidity check doesn't mean, and I think this is true, it does not mean that it has to go up. That's not what this is saying. But it is saying that when you see those triangulations, this is what I'm asserting, is when I see those triangulations, I don't think it's like Booksy's imaginary brain, his world circus in YouTube videos to keep people like preoccupied or something. I don't see it as smoke and mirrors. I'm just looking at what's already being presented. I think the operator, the algorithms that be are already doing this stuff. They're marking off these levels because they're probably going to come back to them. And because they triangulate, that means, to me, that's like more evidence. It's more evidence. It's not less evidence. The fact that this triangulates to like basically the top, that to me is not, I don't know, like it's not me making stuff up. That's just me being like, yeah, that makes sense as to why you would go up here and do a distribution right there. Like, how does that not make sense? If you're trying to offload shares, where are you going to do it? Probably liquidity shelves, like where are the key liquidity shelves? And then so on and so forth. So like when I look at this, I'm like, it's possible this doesn't go up. I could definitely see that. It's possible it goes down, which is what I was talking about with like wave counts down. You're looking at that like, yeah, I mean, it's there. So if the operator doesn't like this, they could certainly slump it down if they can't get the liquidity they need to take it up. And yeah, this is where people get into like the gripe of like, well, you just think it goes up or down. You don't know what's going on. Well, I get that, but this is the reason why the cat ear, I get that argument, but this is the reason why the cat ear argument is like that, because you get to the end and it's like, yeah, it's a liquidity dance. I can't tell you, without any uncertainty, because the market is risk oriented. I can't tell you with zero uncertainty that this couldn't come down, but these are the two targets that are in mind. I can tell you with certainty that I think that these are the two targets in mind, that it's just objectively there. But I can also then say, from my opinion, that's the reason they're doing this, the way they're doing it, is to probably bring it up, not down, at least in this case. That's my opinion. That's my interpretation, which is prone to error. Like, it's very possible. And I've been wrong before. But I think that when we look at it that way, this isn't even like that complex. It's kind of just like, oh, well, basically you have the potential here for a pretty big run-up. I don't think it has to stop there. And I think the question is, do we think that at the end of the day, and it's interesting too, because this is what happened here as well. I mean, it's the same area. I'm not trying to like, again, hoodwink you or make you think this or that. This is essentially like the same thing, because you see that build out, like this is where they went to. It's the same exact idea. Like this is the build out. This is where you're going to go to, kind of thing right there. Same concept, different time. So what makes you think that here it's going to come back down versus here where it just took off and went up? I think it's a question of where you are, what's going on in the market. Where do you see this moving in the future? Do you think it's going to continue after this point? It's not impossible. Just like with AMC, it's not impossible that AMC just runs up to 20 right in one go. But there's also a decent chance that it backs up first and then it goes again, because it hasn't traded that liquidity zone in a long time. The same thing can be said for GME right here. I think there would be a strong desire to trade this liquidity zone. But if they don't hit it now, they're going to come back and hit it later, make no mistake. Like if they don't hit it here and it just goes straight up and it does what it did in 2020 and it has this like build out here and then it just rockets and it goes to 175 and everybody's like, yeah, man, woo! I don't even think it'd be a question in my brain at that point that this is very likely going to try to come back down to 50 in the near future. Could it be that high? Yeah, it could. But then I have to look at things and say like, all right, well, if I'm the operator and I'm doing this stuff and the market isn't where I want it to be, but I'm ready to go ahead and do the liquidity thing, I think it'd be pretty easy to make a case that this is indeed going to come down and that after this point in time, you may get another move here in January. It's possible, like a secondary move up to the top, just like there was here. But that it's really more about kind of getting out of those shares again. And this is where controversy comes in and saying like, well, it may not go above the top again. This creates a gigantic what? Well, probably a huge cup and handle, and then you'd have to look at this as like, well, then it retraces